right, tomorrow's the big day. The markets have been preparing for the past few days for the FOMC. Breadth really deteriorated today. Again, like we've seen it for the past few days, volatility jumped up today quite a bit. Again, second day in a row, volatility jumped up, even though like the trading ranges and things were really, really light and small over the past few days. So a clear preparation. So despite that, there were some interesting moves and rotations and things that were going on. So that's what I'm going to break down in tonight's Market Outlook preview. Today is Tuesday, September the 16th, 2025. This is the Market Outlook from MarketScholars.com. My name is David Settle. So again, the big news that the market is really prepping for here tomorrow and has been for a while now is the first rate cut to come along. You can see like just today alone, like the dollar was our worst performing asset class as a result of the market prepping. You can see gold is up again, gold continuing to move higher, yields were down again. So that's been a pretty common theme. Dollar down, yields down, gold rallying as we head into this first rate cut. And we saw that again today. So that, and even despite the fact too that we had pretty decent economic indicators. If we take a look at here, let me bring up the economic surprise index. I just saw that one. It'd be right there. We go. I was on the right page. So the economic surprise index here. We had better than expected retail sales. We had better than expected industrial production. And despite that, and not only that, but another key element is we had higher crude oil. You can see crude oil here. Let's pull up the chart for crude oil. Crude oil actually rallied today. And this is actually the 0.12% is for the futures contract starting tonight, but they got a bear tag yesterday. That's a pretty good move. Generally speaking, positive economic data and higher commodity prices like crude oil generally lead to rising yields. So which is what we saw last year coming out of the Fed. So I'm going to break down, are we going to get another rise in yields again? And I do that in the full market outlook video. And I did that to a large degree in today's directional option strategies class, kind of the intro beginning part of that class where we break down what's going on in the markets. And I really dove into, okay, what are we going to get? Are we going to get higher yields? I mean, that like the stronger data, the higher oil, and that ultimately led to the energy sector doing well today. The energy sector did very, very well. When you look at here, September 16th, we'll go to the 5-minute chart. It really outperformed on the day today. And utilities, I mean, those are the two really big outliers. Consumer stocks did pretty well, but again, small numbers here. But energy was the one big outlier to the upside. Utilities was the one big outlier to the downside. And usually utilities fall when yields rise. And so the fact that they fell so considerably, again, is another maybe indication that the market's anticipating a jump in yields going forward from here. Let's break down the technical outlook for the market, and we'll take a look at the market forecast for that. You can see, again, we do have a strong bullish posture. We have a drop in the momentum line into oversold levels. Nothing too significant, right? In this particular case, the momentum line dropped not because of a drop per se. We were only down, 0.13 of a percentage point. We're actually higher right now than we were when we had this momentum peak. We're actually higher now than we were there. So this drop wasn't because we fell, and that's actually was the case for the Dow Jones. You can see we did fall from the peak on Thursday. That was actually our all-time high. We have fallen, so your momentum line's oversold. But this, on the S&P, the momentum line fell because we had very small ranges. So, we've had such a strong near-term run. When you look at the 4-week chart, we're up pretty high. So don't be surprised if tomorrow we don't get some kind of initial reaction to the FOMC statement where maybe yields start to rise and we get a little bit of a drop in the S&P. Again, nothing too major. I talk about, and again, in the full market outlook video, how far I expect it will fall and where support will be and when and if we'll actually get our next 5% drop, which is kind of your typical pullback range there, plus or minus a point or two. But that's kind of what I'm expecting to come out of the FOMC here tomorrow. So that does it for our preview video. Again, all of our subscribers and market scholars get access to our full market outlook video with our foundation tier. You can get access with our free tier at marketscholars.com. You can get access to today's market outlook blog posts where I detail everything that happened today, why it matters from an educational standpoint, and what to look for tomorrow. Again, you get access to that for free if you follow this link, up here. Follow that link. It will take you to the page, to today's blog post page, and it will ask you either to log in if you're already a basic subscriber or to set up your free basic account at Market Scholars. Again, it's for free. It's really simple, and you can get access to that daily blog post. Again, detailing what happens on a day-to-day basis, why it matters, and what you can do with it. So thank you very much for watching. Follow me on Twitter for more content at DavidSettle42 in between videos. Have a great rest of your Tuesday night, and we'll see you all next time.